Welcome to the deep dive. Okay, so you've shared this really fascinating analysis of India's pharmaceutical export data. We're talking Q4 for the fiscal year 2025.
That's right. It's quite detailed, goes product by product, company by company.
Yeah, and our mission today really is to dig into that, pull out the most interesting bits, the key trends, and figure out what it all means for the Indian pharma sector.
Exactly. We'll be looking at things like quarter-on-quarter growth, QQ, how things change from Q3.
Right, and year on year too, comparing to last year.
Precisely. And looking at specific products, seeing what's driving performance for some of these big names. We should also probably touch on profit margins.
Oh, definitely. Margin impact is key. And maybe look ahead, patents expiring, market shifts, that kind of thing.
That's the plan. We'll connect the dots.
Okay, good.
Yeah.
So for everyone listening, we're going to focus on a few key companies from this data. Divi's Labs, Gland Pharma, Laurus Labs, Neuland.
Ipica, Concord, Pyrmol Pharma, and JB Pharma too.
Mhm.
We'll look at the specific products making waves for them.
Perfect. Let's kick off with Divi's Labs. They're a major player, obviously.
Right. And what's interesting right off the bat with Divi's, their overall export growth was 6% compared to the last quarter.
Okay, 6% sounds decent.
Well, yes and no. It sounds okay, but actually the expectation was closer to 9% growth, so a bit below target.
I see.
But here's where it gets really telling. If you split their business,
Go on.
their custom synthesis and the CS side, they grew a solid 12% quarter on quarter. Pretty strong.
12%. Okay, that's significant. What about the other side?
For generics business, much slower. Only grew by about 3% QOQ.
Big difference. So custom synthesis is really carrying the load there.
It seems so. And within CS, some specific products just exploded. Raltegravir, for instance, went from exports of like $0.3 million to nearly $13 million.
Wow, 0.3 to 13. That's huge.
It is. And upadacitinib jumped too, from about $3 million to over $13 million.
Another massive leap.
And this one's fascinating. A Pfizer investigational drug, PF0OVHAV7313417. It went from basically zero exports in Q3 to $9 million in Q4.
0 to 9 million. Just like that. These CS deals seem really potent.
They certainly can be. We also saw good QOQ growth in things like Ubrogepant Intermediate and some GLP-1 related supplies, though maybe not quite as dramatic.
So a lot of positive momentum in specific CS products.
Definitely. But it wasn't all good news for Divi CS segment.
Oh, what else?
Well, sacubitril/valsartan, which is a really big one for them, actually dipped slightly from about 43 million down to 40 million.
Okay, a slight dip. Still a big number, though.
Absolutely. But we also saw declines in exports for sitagliptin, iopramide, orlistat, ketomide, simvastatin too.
So some ups and downs within CS. What about the generic side? Any specific declines there?
Yeah, on the generics front, products like levetiracetam, dextromethorphan, and carbidopa saw exports fall compared to Q3.
Got it. Now, that sacubitril/valsartan dip you mentioned, you said it's a big product for them.
Huge. The analysis highlights it brought in $159 million over the whole of fiscal year 2025.
159 million, just that one product.
Yeah, that accounts for something like 43% of Divi's entire custom synthesis sales for the year.
43%. Wow, that's a lot riding on one molecule, isn't it?
It really is. And that concentration risk is, well, it's about to become very relevant.
How so?
The main patent for sacubitril, it expires in July 2025. Pretty soon.
Ah, generic competition incoming.
Exactly. The expectation is significant price pressure, more competition, and that's likely going to hit Divi's CS growth and probably their overall margins starting, say, the second half of fiscal 26.
So a potential storm cloud on the horizon there, despite the current strength in other CS areas.
Precisely. Replacing that kind of revenue, and especially the margins from sacubitril, that'll be a challenge.
But for this quarter, Q4, any immediate margin impact?
Actually, yes. The report suggests that because of the strong performance from those other CS exports we talked about, Divi's might see a margin improvement this quarter, maybe around 1.8 percentage points or 180 basis points.
Okay, so near-term positive on margins, but a longer-term question mark around sacubitril. A mixed picture, really.
That sums it up well.
All right, let's switch gears. Gland Pharma, their Q4 growth looked much more muted.
Yeah, quite a bit different from Divi's recent CS surge. Gland saw about 2% quarter-on-quarter export growth.
It's just 2%. And the expectation was?
Much higher, around 16%, including their Cenexi acquisition. So 2% versus an expected 16%, that's a significant miss.
Definitely a miss. Was there anything driving that 2% growth, or was it flat across the board?
No, there was a standout performer, Shipments of enoxaparin combined with heparin, they jumped 35% QQ, went from $13 million to $18 million.
Okay, 35% jump in that specific area. That's strong.
Very strong. And here's the really specific detail. Basically, all of that growth came from shipments going to the U.S.
The U.S. market specifically.
Uh-huh. Enoxaparin shipments just to the U.S. surged from 3.4 million to $11.2 million.
Wow. So heavy reliance on U.S. demand for that particular product jump.
It certainly looks that way. Makes you wonder what's driving that specific U.S. need, doesn't it?
It does. Did anything else move the needle for Gland?
There was decent percentage growth in ketorolac, mycophenolate, chlorothiazide, and levothyroxine too. But again, like Divi's, they also had some products decline.
Such as?
Things like heparin on its own, caspofungin, meropenem saw a big drop, actually, and rocuronium exports were down quite a bit, too.
Okay. So the implication of that overall lower than expected growth, what does it mean for their financials?
Well, the analysis suggests it could mean a potential miss on their Q3 revenue estimates again, excluding Cenexi, maybe by around 14 or 15%.
Ouch. That really shows how dependent they can be on certain products hitting their numbers.
Absolutely. Volatility is the name of the game sometimes.
Okay, let's talk about Laurus Labs. Their story seems quite different for Q4. Much stronger growth, right?
Oh, definitely. Laurus had a really impressive quarter. Exports were up 67% compared to Q3.
67%. That's massive. What was fueling that?
It was mainly driven by their CDMO business,
Yeah.
contract development and manufacturing, specifically products they make for Vertex and Pfizer.
CDMO again. Seems like a hot area.
It really is. That segment for Laurus went from just $0.8 million in Q3 exports to $28 million in Q4.
0.8 to 28 million in one quarter.
Yep. Huge surge. Plus, they also had continued strong performance in their HIV product portfolio. That helped too.
That CDMO jump is incredible. Really highlights India's strength there. But was everything rosy for Laurus?
Not entirely. There was actually a bit of a dip in their animal health supplies, specifically for Intervet, which is MSD animal health.
Oh, what happened there?
Exports for products like identifies and zilpaterol hydrochloride, they basically halved, dropped from 10 million in Q3 down to 5 million in Q4.
So even within a strong overall quarter, you can have these specific segments facing different pressures.
Exactly. Animal health has its own cycles, its own competitive dynamics.
Right. Okay, moving on to Newland. Their Q4 exports were pretty flat.
Yeah, overall shipments were flat compared to Q3. But underneath that flat surface, there were some interesting shifts.
Like what?
Well, they saw a decline in shipments of bempedoic acid. That fell from about 6.4 million down to 4.9 million.
Okay, a drop there.
But that was pretty much canceled out by a big increase in tetrabenazine shipments. Those went up from just 1 million to $5.7 million.
So one goes down, another goes up, and it balances out overall.
Pretty much. It's a good example of how the product mix can change even when the top-line number looks stable.
And what about CAR-XT for Newland? Any movement there?
No, the analysis notes that CAR-XT shipments were flat quarter on quarter, stayed at the same level.
It's amazing how drilling down into individual products gives such a different picture than just the headline growth number.
It really does. That's where the real insights often lie.
Okay, let's pick up IPCA. Their Q4 growth was 7% QOQ, right? Just slightly shy of the 9% expectation. And that's excluding Unicum.
Correct. That 7% is for IPCA standalone.
Yeah.
And the growth drivers there were things like artemether, paracetamol, allopurinol, and also Zerodol, which is a well-known brand for them.
Okay, solid contributors. Any drags on performance?
Yeah, they saw some QOQ declines in exports for HDQS, Rapiclav, and Metformin. So again, a bit of give and take within their portfolio.
Now, what about Unicum? IPCA acquired them not too long ago. How did their exports look?
Interestingly, Unicum actually did better than expected in Q4. Their exports grew 9% quarter on quarter. Some analysts were apparently expecting a decline, so that's a positive surprise.
9% growth for Unicum. So how does that factor into the overall IPCA picture?
Well, if you combine IPCA and Unicum, it suggests their total export growth might have been a bit better than initially forecast, maybe 3 or 4 percentage points higher than the 4% that was projected for IPCA alone.
So a potential upside to the revenue estimates?
Potentially, yes. But there's a flip side. Unicum's business historically tends to have slightly lower profit margins than IPCA's core business.
Oh, okay.
So if Unicum makes up a bigger slice of the revenue pie, it could put a little bit of downward pressure on the overall combined company's profit margins.
Right. So higher revenue possibly, but maybe a slight margin squeeze, a trade-off.
Exactly. Something to watch.
Okay, let's look at Concord. They seem to have had a really strong Q4, 55% QOQ growth.
Yeah, really strong performance from Concord. 55% increase in exports.
What was behind that?
It was almost entirely driven by their API segment, active pharmaceutical ingredients. That part of the business grew by a huge 64% quarter-on-quarter.
64% in APIs. Wow. What about formulations?
Formulations actually declined slightly by about 8% QOQ, so the growth story was clearly APIs.
And which APIs specifically?
Key drivers mentioned were cyclosporine, everolimus, and tacrolimus. That's like strong demand for those.
And a higher mix of API sales, and that's generally good for Concord's profitability, right?
Usually, yes. APIs tend to have better EBITDA margins for them compared to their formulations. Makes sense. Plus, the company had apparently mentioned before that some sales might shift from Q3 into Q4 or even Q1 of the next year because of how customers buy and annual tenders work. So some of that Q4 strength might be timing related too. Ah, okay. A bit of catch-up maybe. Still, strong numbers. Now, Piramal Pharma, they kept up their momentum too. They did. Another solid quarter for Piramal, 11% QCO export growth in Q4. And that's following a really strong 33% growth in Q3.
Consistent performance then. How did the full year look for them?
Very strong. Fiscal year 25 exports jumped significantly from around $272 million in FY24 up to $430 million in FY25.
Quite a leap. Any particular products driving that annual growth?
Yeah, the analysis points to Ramachet sulfate, Vibron, and bempedoic acid as the main drivers for that impressive full-year performance.
Got it. Okay, last one on our main list, JB Pharma. How did they fare?
JB Pharma did slightly better than expected. Their exports grew 6% quarter-on-quarter, just beating the estimate of 4%.
Okay, a marginal beat. Any particular bright spots?
Yes, their CDMO business again. Specifically, their lozenges CDMO exports. Those are up a healthy 21% QOQ.
Lozenges CDMO up 21%. Seems they had a good order book there.
Apparently so. The company had indicated they expected strength in CDMO, and these numbers seem to confirm that.
And similar to Concord, that higher CDMO mix should help margins.
That's the expectation, yes. JB Pharma's India formulations business and their CDMO segment are both considered high-margin areas.
Right.
So having a bigger contribution from CDMO in Q4 compared to Q3 should provide a nice little boost to their overall EBITDA margins.
Makes sense. It seems CDMO is a recurring theme of strength across several companies.
It definitely stands out in this Q4 data.
You also mentioned some quick takes on a few others. Blue Jet.
Yeah, Blue Jet also showed strong QOQ growth, around 12%.
And Suven.
Suven, if you exclude the Cohance business they spun off, had more modest growth, about 7% QOQ. But Cohance itself did very well, 17% QOQ growth.
Okay, and one that went the other way, Polymed.
Right. Polymed actually saw a 7% COQ decline on export shipments. So that might signal some potential headwinds or downside risk compared to what people might have expected.
So really a very varied picture across the board.
Absolutely. Different strategies, different product cycles, different market exposures playing out.
And bringing it all together, the analysis you shared included a perspective from IIFL, the financial services firm. What was their take?
Their view, based on this data and likely other factors, seems to favor pharma companies focus more on the Indian domestic market right now, rather than the pure export place.
Interesting. Who do they like on the domestic side?
Their top picks mentioned were JB Pharma, which we just discussed, having good CDMO and domestic business, along with Torrent Pharma and Mankind.
Okay. And on the export side, any preferred names there?
They still have picks there, favoring Sun Pharma, Lupin, and Aurobindo among the export-oriented companies.
But generally more cautious on exporters, especially some specific ones.
Yeah, they seem particularly cautious about stocks like Dr. Reddy's and also Zydus and Cipla.
Why the caution there?
It seems to stem from a significant reliance these companies have had on earnings from the cancer drug Revlimid in FY25.
Revlimid, generic competition is ramping up there too, isn't it?
Exactly. As more generics enter, the earnings from Revlimid are expected to decline, potentially quite significantly. And that could really impact the overall financials for those companies heavily exposed to it.
Got it. That makes sense. So, okay, let's try and wrap this up. Key takeaways. What should listeners remember from this deep dive?
I think the main thing is just how diverse the performance was in Q4. You had really strong growth from companies like Laurus and Concord, often powered by specific products or that booming CDMO demand we talked about.
Right. The CDMO theme was definitely strong.
But then you had big players like Divi's and Gland Pharma, who, while still growing in some areas, maybe didn't meet those higher expectations overall.
Yeah, highlighting how much individual drug performance or missing targets for key drugs can swing the numbers. And those looming patent expirations, like sacubitril for Divi's.
Exactly. Those are big factors to watch. So it really underscores the importance of looking beyond just the headline numbers.
Hopefully, this walkthrough has given everyone a clearer, more focused picture of what's happening in Indian pharma exports right now. We tried to hit the crucial details without getting too lost in the weeds.
Yeah, understanding these product-level trends and strategic shifts is really key to getting a handle on where the sector might be heading.
Absolutely. And maybe that leads to a final thought for our listeners to chew on.
Go for it.
Okay, so considering everything we've discussed, these big patent expiries coming up, the clear rise in CDMO importance, how do you think the whole competitive playing field in Indian pharma exports might change over the next year or so?
That's the big question, isn't it?
What strategies might companies need, to either defend their turf or carve out new growth areas in this shifting landscape?
Yeah, lots to think about there. How do they balance generic specialty products, CDMO? It's definitely a dynamic space to keep an eye on.
For sure. Well, that's all the time we have for this deep dive. Thanks for joining us.